The ready-to-drink cocktail market rose by more than $400 million in 2021 as consumer demand skyrocketed. Coca-Cola, Monster, and PepsiCo are just a few of the major names getting into the craze. Thomas Ashbourne launched their line of craft canned cocktails just last year. CEO Cara Kamenev joins us now. Cara, thank you so much for joining us. And I know your company is announcing retail expansion with Kroger. We'll get to that in just a minute. But first, I just want to kind of lay the groundwork as far as these spirit ready-to-drink drinks. I mean, why is this that we're seeing such growth in this industry, in this sector? AB InBev reported their results and they saw strong double-digit growth in spirits ready to drink in their portfolio. So why is it? Why is it that consumers are preferring this over, for example, wine or beer?
Thanks so much for having me. So Thomas Ashbourne is a craft cocktail company that, to your point, we launched just last year in 2022. We have pre-mixed cocktails in a can and a 375 ml bottle with incredible celebrity partners like Sarah Jessica Parker, Vanessa Hudgens, Ashley Benson, and many more to be announced soon. And, you know, as you mentioned, obviously alcohol is an incredibly dynamic industry. The alcohol beverage industry is growing and tends to be very recession proof. But really what's driving growth within that industry is the pre-mixed cocktail category. So, you know, reports vary, but just if we look at the last 52 weeks in IRI data, you know, spirits was up 3.6% and pre-mixed cocktails grew 23%. So the growth in the category really is explosive, especially compared to the rest of the segment. And what we're seeing is that consumer tastes really changed dramatically, accelerated by COVID and born in COVID, but certainly not just because of COVID. We expect the category to remain extremely strong. I think consumers, you know, it's here to stay, that you expect the same quality and taste and, you know, the same kind of bar quality cocktail that you'd expect out, you expect the same quality at home. And that's what Thomas Ashbourne offers. That's what's driving the growth in the category. And I think that's why, you know, companies like ours are interesting to Kroger, which tends to offer the best in innovation to their customers.
And I know that you're expanding, you're doing a retail expansion into 800 stores at Kroger.
Yeah, so we're excited to be announcing our partnership with Kroger and to bring the brand to consumers nationally. We're going to be in 800 doors across 15 states, 10 of their banners. I think it's over, you know, 1,400 unique, what we call points of distribution. So it's an exciting opportunity to bring the best in bar quality cocktails to a lot more consumers nationally.
Now, Kroger, actually, their CFO talked about the increase in associate wages. So are you seeing in this space also sort of pressure from rising wages, perhaps also for the materials, for the cans themselves? What are you looking at as far as costs are concerned there?
Yeah. So just like every other industry and every other company, we've kind of weathered the supply chain hurdles. We're actually seeing a slight improvement, particularly on shipping costs, shipping timelines. We're seeing that come down a bit this year. I think if you're managing a company or, you know, running a company or a brand or anything in the CPG industry, really, it's more about adjusting your expectations and your management style. So perhaps you want to overinvest a little bit on inventory, or invest in storing dry goods locally to ensure that you have, you know, product to meet your supply. But overall, I'd say, you know, the headwinds haven't kind of gone, but I think it's more that business leaders have learned how to manage them. Certainly we have.
Cara Kamenev, Thomas Ashbourne CEO, thanks so much for joining us, and I'll have to try one of your drinks.